keep it all business. Any concept, anything like that, we can ultimately go ahead and apply to the personal. So let me go ahead and start the recording now. So thank you guys for being a part of this presentation today. This is our Budget 101 segment. And today we'll be sharing with you basically ways to set up a budget for your business. So let me just go ahead and jump right into the agenda. Let me go ahead and share my screen for those that are on the Zoom today. So welcome guys, my name is Jeff Badu. I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises LLC, which is a multinational conglomerate in the finance industry. And what we do is we provide a suite of financial services, including tax preparation, financial coaching, credit repair, property tax appeals, and other services of that nature. And today we're fortunate enough to be on Zoom. So we have our Chicago Urban League class today that I'll be basically teaching on Zoom. But also we have our Instagram and then we have our Facebook channels as well. And this is just to get more engagement, get more of an audience. Usually we get some pretty good questions on the platforms, and I think it'll be very helpful for the group today. And this is a recorded session, so for those who are on Zoom, this is recorded, so you will have access to it. If you ever need to slow me down for anything, like any questions or any clarifications, please let me know. Today is for you. It's not for me. It's completely for you. And my goal is to make sure that I'm giving you all the tools. I'm equipping you with all the tools that you need in order to run your business successfully. So usually the topic that I touch on the most is finances, right? That's my area of expertise, or I call it my circle of competence. Finances is something that I've studied, live and breathe. That's what I do. That's my bread and butter, basically. So with that being said, if you do want to ask a question, there's two ways to do it. If you're on a Zoom today, to ask a question, you can simply unmute yourself and ask a question at any time. You can feel free to cut me off at any time. For each slide, I will take a pause and see if there's any questions, just to maintain the tempo a bit. Or you can also type in a chat box. And as Zoom etiquette, if you're not speaking, we do ask that you mute your mic. It's always good practice to mute your mic. Sometimes there's background noise that you may not even be aware of. So it's always good that you mute your microphone when you're not speaking. And when you do need to speak, you simply unmute yourself. And for those that are on the Zoom, we do love seeing your beautiful faces. So if you can get on camera, I think it's always best to do so. And if not, no problem at all. For those that are on Instagram and Facebook, you can ask your question at any time. And you can basically do that by typing in the chat box. And I'll be more than happy to answer any question that you may have for me. So with that being said, let's talk about the agenda. Today we'll be talking about understanding the cost of key activities, or I call them investments, in your business essentially. So we'll be diving deep into some of the key things that you should be investing in your business. One thing about me, and I think one thing that is attributed to my success, is that I don't look at costs as expenses. So I don't look at them as, it's a burden. I look at them as investments, something that can yield me a return on investment. When I hire an employee, that employee can produce results. They can work with clients so that they can generate me more revenue. They can generate the company more revenue. So to me, that's a key activity right there, and that's a key resource. Then we'll go into budgeting. So we will talk about a budget. I'll give you some of the key components of a budget, and then we'll use a template. We'll actually go through an example of a budget. And then, I'll introduce it and then we'll develop a budget. And for those on a Zoom today, if you have a specific component, like something that you feel is a part of your business and you're curious as to where that falls within your budget, you can feel free to let me know. We are fully open, so you can ask any questions at any time, but we will save the end, maybe 10 minutes or so, for some Q&A. Now, this will go for about an hour and 45 minutes, so we will end by 8 p.m., if not earlier. So in case you want to track time, usually my presentations, I don't like it to be too long. And for those that are on Facebook and Instagram, you might be wondering, why am I not doing my radio show tonight? Well, that's because I'm right here today giving you guys some information on your business as to how to properly develop a budget. So let's go to the next slide here. So understanding the cost of key activities and ultimately, I'm sorry, give me 1 second. All right, there we go. All right, so understanding the cost of key activities and resources. So one thing I always like to start off my presentations with, especially in this capacity, is that as a business owner, you must be able to track the money. You must. If you can't track the money, you don't have a business. You have what's called a hobby, right? And good evening to you too, Eunice, on Facebook. Big shout out. But if you can't keep track of the money, you don't have a business. You have a hobby at that point, right? Because if you're treating your business as if it's not something that you truly value, by not keeping track of the records, by not looking at where the revenue is, where the expenses are, then you don't really have a business at that point. It's something that, it's not that you're not taking it serious, by the way. It's just that it's not a business. A business is one that has financials. A business is one that has a budget. It's one that has advertising. It has, some legal components to it. It has an entity structure behind it. So one thing to understand too is that there are things that are considered key activities of your business. In other words, these are expenses that help you grow your business. And today I'll be putting real life numbers in action. So we'll be going through real life examples. And my apologies for those that are on the Facebook and Instagram. You won't be able to see the slides, nor will you be able to see the Excel examples. That's one of the benefits of being part of the Zoom platform, because this is a course hosted to the Chicago Urban League. So a few things with the key activities. Remember, these are expenses that help you grow your business. Examples include marketing. Then you have supplies, software, employees, etc. Now, the goal with these costs, quote unquote costs, I like to put them in quotations, is the goal is to turn these costs or investments into revenue. If you want one way to completely change your landscape of business, to completely improve your business, think of costs as investments as opposed to burdens or costs, like true costs. All right, so let's just quickly take a look at some of these components. All right, so actually before we do that, I want to dive into the ROI segment, and then we'll go and look at some of the components. But what you can do, I know last time we chatted, you can incorporate your costs into your pricing. So if you know that it costs you 30 cents to make a t-shirt, actually let's keep it simple. Let's say it costs you 50 cents to make a t-shirt, and the profit margin in your industry is 50%. Well, all you need to do is sell that t-shirt for $1 to hit your profit margin target, or at least according to the industry. So that way you can incorporate your costs back into your pricing. If your PM or profit margin is 50% and it costs you 50 cents, usually as a business owner, you know how much it costs you for the things you have, or basically for it to make a product or a service. Usually you know how much your software is going to cost. You know how much your LLC is going to cost. You know how much it costs to produce a t-shirt. Usually you kind of have that knowledge, that education. Usually the revenue side, how much you should price something, is where it can be a bit challenging. It's usually the top line of a business that sometimes is a challenge to predict. So one easy way to predict it, or to come up with the number, is to back into it using the profit margin on your business. How do you find a profit margin? You use an IBISWorld report. And I would say this is the first group that I've encountered that has not requested an IBISWorld report from me. Remember, IBISWorld is a platform. It's a business industry platform that allows you to get an industry report that tells you all about your business industry. It tells you what are the competitive advantages. It does a SWOT analysis, strengths, weaknesses, opportunities, and threats. It also tells you what percentage your industry is growing, What percentage of the revenue comes from employees, marketing? You know, how much does the owner take home typically? What's your profit, right? And that report tells you what your profit margin is. So with that profit margin, you add that to your costs, and that backs into your price. I would probably add, Warren Buffett likes to call it a margin of safety, room for error. So you can bump it up. You can bump up the price just a little bit so that you're not just covering your costs and your profit margin. You're leaving a little bit of room for some extra profit, essentially. Right. One thing you should note is that do not cut costs in areas that help you grow your business. So now for those on the Zoom, this is where it really benefits. Let's go ahead and take a look at a budget for a second. So I was able to put together a budget. This is what we send to our clients, by the way. It's called our sample financial statement template. And to get a head start on the budgeting side, this is what a budget typically looks like. It has income at the top, which is money that comes in. Okay, sales when you sell a product, when you sell a service. Sales, revenue comes in. And then that leads to total income, which usually is also your gross profit if you're a service business. If you're a product business, then you typically have what's called cost of goods sold. Cost of goods sold are basically when you sell your product, how much did it cost you to make that product? Basically inventory. So inventory is a line item on the balance sheet that turns into cost of goods sold as you sell your product, essentially. So let's look at all these expenses right here. By the way, here's my secret too. Every 3 months, what I do is I dig deep into my budget. And I really wish I could show you my budget today, but it can look quite scary for some people, so I won't necessarily go there. But this is a sample budget. So what I'm going to do is let's go through each and every line item. What I do is I go through every single line item of my budget, and I ask myself the question, is this generating me return on investment? Is this producing value in my life? Yes or no? And in most cases, it is a yes. For example, advertising, Yelp ads. It is a yes, right? But in some cases, though, it's a no. It's like, well, why do you have a Hulu subscription when you already have Netflix? I'm a big movie watcher, by the way. Why do you have Hulu when you already have Netflix? It doesn't make any sense. You haven't watched all the movies on Netflix. Why are you watching Hulu too? Right? So, and I'm putting this in the sense of personal deductions too, because as a business owner, we know we can leverage some of these personal deductions and turn them into business expenses. That was just an example. Or maybe you don't watch TV at all. Why do you have cable? Doesn't make any sense, does it? If you don't watch TV or you watch minimal TV, why in the world do you have cable? And in the state of Illinois, there's a huge cable tax that some people don't even realize. When I found that out, even when Comcast was offering me, $10 or $5 to $10 a month, I said, absolutely not. When you add those taxes, I said no. You know, so that's something you want to keep in mind. But I would go through every single line item on your budget. You start with advertising and marketing. Is it generating you results? Now, with advertising, you want to break it down. For us in our firm, we use Yelp, Facebook, LinkedIn, Twitter, Google, right? And then we have this brand new, so this is a great example. We have this brand new thing called geofencing, where basically if somebody were to come to our page or they searched us on Google, or maybe they searched tax services on Google and they clicked our page because they found us on Google. Well, now every time they go on Facebook or they go on a website that has the geo fencing turned on, it basically fences them so that the ad keeps popping up wherever they go. Right? I know it sounds annoying, but it is a powerful marketing tool. And you guys have probably seen this where you've been searching for, let's say, for jackets, for example, for the wintertime. You search it on a site, and all of a sudden it starts popping up everywhere you go. Well, that's basically what we're doing. So we're trying it out as a new thing. That's what Badu Tax Services. For that, we pay about $300 a month. And so with that, we're going to go into 6 months from now, we're going to assess how well it's performing. Is it something that's generating us results? Is it producing return on investment? Which we'll cover that concept in a deep example in a second. So I would say go through every single line item. And from a budget standpoint, you want to get as detailed as you possibly can. How much are you specifically spending on Yelp each month? How much are you specifically spending on Facebook every single month? How much are you spending on Google? Right? How much are you spending on LinkedIn? You want to know it down to the penny how much you're spending on this stuff. Next is bank charges and fees. Right? This is something that got me in trouble in the past because we tend to, in the past we used to borrow a lot of expensive debt. We still borrow a lot of money, but now we're able to get cheaper debt because of better results, higher credit scores, things of that nature. So you want to look at every single, basically you want to look at the line item. Are you paying too much interest? Maybe it's time to refinance. Right? You want to be very smart when it comes to money. You have to make decisions. Now, usually the person that helps you with this is a chief financial officer. It could be yourself if you're experiencing this stuff, but a chief financial officer is somebody who's going to go through every single line item and say, how can we reduce the expenses without negatively impacting revenue, and how do we boost revenue, essentially. The next one is commission and fees. In our business, we pay a lot of, we basically, so it can get a little confusing with the tax returns, but commission and fees are more so, what are some of the non-bank fees that you're paying? In reality, if you're paying a contractor, in our firm we have a lot of contractors, it should fall under contract labor. We have a lot of folks who are 1099. We're set up like a real estate brokerage, basically. So a lot of our folks are contract labor. We don't have any W-2 employees. So with contract labor, you want to see, okay, how much am I paying these folks, and what is my industry doing? If I'm paying XYZ so amount, how much revenue is XYZ producing? You want to get down to the penny. Car and truck, that's another one. You want to see if maybe you don't drive as much. Maybe it's time to sell that car. Insurance, right? So we have insurance broken down into two components. One is just regular insurance, and then we have health insurance. And then another thing is interest. So I know I mentioned earlier about bank charges. So bank charges are more like fees, like bank fees. Maybe it's time to downgrade your account because you're not in the most qualified, bank program. And then you have things like job supplies, legal and professional. How much are you paying your legal and professional folks? Meals, that's a big one. How much are you eating out? And as a business owner, we can tend to deduct pretty much almost all our meals. Office expenses, rent and lease. Is it time to get in a new office space, or is it time to get rid of that lease anyway? In our firm, we're 100% virtual. What's the point of having an office space? It's absolutely no point. It's a complete waste. So for us, our rent and lease is basically zero. Now, as a tax strategy though, me personally, I'm in a home office right now. I rent this office space. This is my office. I own this place. I rent this place to my business for rent. They pay me rent. And in exchange, it leads to a tax deduction in the form of depreciation. So it's one of those tax strategies that I personally use, and I also encourage it to my clients. Other things are like repairs and maintenance, and then salaries and wages, which does not include owner draws. Owner draws are basically distributions or money you're taking from your own company. Supplies, taxes, oh boy, how much taxes are you paying, right? And license fees, things of that nature. Travel, that's a big one. So you want to get down to the line item. You want to get real down every single item. I would say every 3 months, analyze your budget, analyze your finances, and see what areas can you do to reduce the cost while not negatively impacting revenue. What things do you need to be investing more in? And what things do you need to be investing less in? And I'll give you a prime example of what we've done in the past. So with that being said, let's go into another concept called return on investment. Return on investment, for those that are on the Zoom, I'm going to put the formula. It is simply, how much have I profited from an investment? So it is profit divided by investment, aka expense. So this is why it's very important to understand that when you spend money in your business, it's not supposed to look like a cost. It's supposed to look like an investment, that you've actually made an investment. So if I say that I have 100% return on my investment, it means I've doubled my money. So here's how we do it. So to figure out the profit equals revenue minus cost, right? Or investment. So if my revenue, let's just say here, if my revenue is 200 and my cost is 100, well, my profit is 100. 200 minus 100 equals 100. And what's my return on investment, or ROI? It is simply 100, how much you profited from, divided by how much it cost you. So if you sold something for 200 and you spent 100 to get that 200, you have 100% return on investment, aka 1. So with the number, you do want to multiply it by 100. So what I would do is I would take this formula and I would make sure I multiply it by 100 because I have to get it in the form of a percentage. So that means that my ROI, actually in Excel, what you can do if you want, you can make it easy. You don't even have to multiply by 100 anymore. You just click the percentage and boom, it gives you your return on investment right there. Now, let me give you guys a prime example. So in our firm, we've been fortunate, very, very fortunate. We basically started off, when I started my firm in 2016, I started with 100 clients. Right? By the way, these were non-paying clients. These were clients that I accumulated over time from networking, family, friends, and everything like that. We had 100. Now we're very fortunate enough to have over 2,200. And one thing we attribute to that success is our ability to market. So one of our biggest line items on our budget is advertising. So with Yelp, the way that we started back in the day was we started with $300 a month towards Yelp ads. I met a guy and he was like, yeah, you know, if you spend money on Yelp, we'll give you an extra like $100 or so, you know, and as long as you do that for 12 months, we'll continue to give you money. I'm like, sure, why not? They'll give me $100 if I give them 300. So already I'm achieving a 25% return on my investment. Right, that's a pretty good deal. That's a pretty good deal. So off the bat, I'm already in the game. So when you're making an investment, try to find things that put you in the game already. Now, if Yelp was a terrible ad platform and I was spending 300 to get 400, and it was a bunch of garbage, then I'd be like, okay, you know what? It doesn't work too well. The nice thing I like about Yelp, not to be selling the platform or anything like that, is you only spend money when people run ads. I mean, when people click on your ad, basically. So it's cost per click. So for us, at 300, when we were spending $300 a month, it was landing just about, you know, in the past, like, believe it or not, it was giving us about 50 new clients a month during tax season. So here's the formula. Let me just move all this stuff out of the way. So it was generating $300. So our cost is 300. That's how much we've put in. We put in 300. Revenue wise, it gave us 50 new clients every single month. And back in the day, we used to charge $150 per tax return. That has since changed. You know, so that gives me $7,500 a month. This is a real life story, by the way. $7,500 a month. I turned $300 into $7,500. That means that my profit, $7,500 minus $300, equals a 2,400% return on investment. Now, for everybody that's on a Zoom call today, I just want to ask one question. If I told you that if I gave you if you gave me $1 and I would give you $24, would you take that? Okay, we already got a yes. All right. Okay, anybody else? I mean, who wouldn't take that investment? All right, is there anybody who would not take that investment? All right, so we're all on the same page. We're in the right room today. So that's it, right? 50 new clients at $150 per month. This is a real life story. In 2017, when we fully launched, so the firm was started or open in September of 2016 when I left my full-time job at PricewaterhouseCoopers. I had 0 paying clients, but I had 100 non-paying clients, and eventually we converted them to paying clients because I told them up front that, hey, by the way, I'm going to start charging at a certain point. And that, lo and behold, 2017 came about. So with Yelp, by the way, we had to give reviews. So every time we work with a client, we ask them for a review. Our reviews are how we built the presence. We ran some Facebook ads. We had a presence online, and we started doing workshops. We started doing a lot of different things. And when I say we, it was only 2 at the time. It was myself and a man by the name of Cofield, who's still with the firm today. So us 2, they're just man in the fort and just keeping going and going and going. So 50 new clients at $150 a month. I'm sorry, $150 per client. So that's on a monthly basis, but that was only for 4 months. That was during tax season. Now here's a secret. The average person stays with their tax preparer for 7 years. So now we got to multiply this number by 7. So now my return on investment just became 17,400% over the lifetime of this one small investment that I made, $300 per month. Do you see how far you can make $300 go? Right? So that's 7 years. Now in our firm though, so when it comes to numbers and finances, we like to be very conservative. So in our firm, we would say our lifeline of a client is probably going to be double that, maybe 14 years, because we do a lot of things to consistently enhance the value that we bring to the client. We do workshops, we do some proactive tax planning, we do family plan. We do a lot of different things. We have other services that we can offer to that same client. So there you go. So that's times 7. Now, over the lifetime of this client, they're also going to do at least one tax plan in their life. Like at some point, they've got to sign up for a different service. Usually that's what we call our tax planning service. At some point in that lifetime, they're going to reach out to us for tax planning. So if I take those 50 clients and I'm just doing that 1,000, well now that's, as a matter of fact, let me be fair. Back in the day, we only used to charge $250 for our tax planning service. So let's just do this, plus 250 times, so 250, right? Let's just say for the client, times 50. So 50 clients will sign up for tax planning at some point throughout the life of the relationship or the life of the service. So with that boosts the revenue now to $65,000. So by investing $300 on Yelp, and assuming I'm doing good work for the client, assuming I'm asking for reviews, assuming we're enhancing the service to the best possible, extent, by investing $300, I'm going to make $65,000, and that's a profit of $64,700 off advertising. $21,567. Now there's a return on investment of 21,567%. Is there anybody today on this call that thinks that we should not invest more money into Yelp? All right. So the silence lets me know that everybody would probably think that we should put more money into it. But here's what businesses do. It kills me all the time. They start cutting costs. They start cutting corners. They start cutting things that work. Why would you cut something that actually works? Doesn't make any sense. So what do we do though? We increase this price. Now what we do is we spend $3,000 a month on Yelp during tax season. And oh, by the way, they give us an extra $1,000 for the first 2 months. So $3,000 a month. And now instead of 50 new clients every week, let me take it back. We were getting 50 new clients every month. Now we're getting 50 new clients every week. So now instead of 50, it's 200 clients that are coming to us. And there's something else wrong in the formula here too. So instead of, so it's 200, right? So it's 200 clients coming in at a 3,000 cost. So this should not say 3,000. So it's 200 times now what the average client pays us now, like our average client on our books pays us $500. So we've since enhanced our value of the firm to the point where we can charge the average client $500. So 200 times 500, and this client stays with us for 14 years. Instead of 7 years, that's what the industry is doing. Our clients are going to be staying with us for 14 years. We've already ran the projections. Some will stay with us for life. And the average tax plan we can do now is $1,000. And so that's times 200. So for those that want to understand the formula, here's what I did. I took 200 new clients on Yelp each month at $500 per client times 14 years. So they're going to stick with us for 14 years. So we got to multiply by 14. Then I add $1,000. That's the cost of our tax plans now. So our tax plan average went from $250 to $1,000. And we're going to get 200 clients to sign up at least one time. This is assuming they only do one tax plan. We have some clients that pay us every single year for tax planning. So we're being very conservative here. That's $1.6 million off a $3,000 investment. That means our return on investment is 53,323%. Does anybody have any questions on how this formula work, or how, like, you know, is this making sense to everyone? All right. So with that, I mean, that's the power of an investment in your business. See, I could have easily been saying, somebody said, okay, you got to pay me $300 to advertise your business. Most business owners are actually going to say no to it. It kills me all the time, $300 a month. Now, I know not everyone can come up with $300 a month up front. Right? I know not everyone can do that. But there are things like other people's money, right? There's borrowing money from banks, business credit cards, business loans, line of credit, right? There's so many things that you can dip into. So a $300 investment went to $3,000 a month, but it's yielding $1.6 million over the lifetime of that investment. And this is just over a 1 month period. That's huge. For me, I would much rather put my money in this all day, every day. I love the stock market and I absolutely love real estate. But this right here is what I'm willing to put $3,000 of my own money or the firm's money in order to generate $1.6 million. The same concept can apply for an employee. When you hire an employee, you want to run these numbers too. What's the cost of that employee? What's the investment? What's the potential revenue that this employee can yield? In order to do that, you want to get down to the numbers. How many clients can this employee bring in on a monthly basis? How many clients can they service? How much can this client charge, or how much can a customer pay you, or, you know, per customer? What's the lifetime trajectory of this client, right? And then ultimately, what are some different services? So in this one, what we did was we packed in what's called upselling. So we do a lot of upselling in our firm. So can this person upsell? And if not, why can they not upsell? So if you do tax preparation, why can't they do tax planning, tax representation, financial coaching? Okay, maybe you want them to specialize in one thing, which is cool. I actually think that, I mean, that's the route you should lean more towards. But if the two services relate to each other, they require pretty much the same expertise, then why not let them do both? So you want to break it down. You really want to break it down. Every single advertising, this is how we analyze every single cost/investment in all of our businesses. Same thing with real estate. We have banks that sometimes we have to pay interest to. We want to analyze what's the interest rate, what is it costing us, and is there better or lower interest rates that we can get out there in the open market. Right now, interest rates are at the lowest they can possibly be. So I would expect that if you had a loan 5 years ago, you're thinking about at least refinancing in 2020 or 2021 when we're historically low rates, because the economy is quote unquote not going up, and the Federal Reserve wants to stabilize the economy. Same thing with insurance. What type of insurance are you paying? Can you do some comparisons? And with this one, what we're talking about is like general liability insurance. So you always want to be proactive when it comes to the numbers. One of the reasons why we have to budget is so that we need to make sure that our revenue is at the highest it can possibly be, and our expenses are at the lowest they can possibly be without impacting revenue. And if there's an expense that is generating you return on investment, why is it that you're not putting more money into it as opposed to thinking about putting less money into it? So anything that's going to boost the top line revenue, maybe bringing on more employees, maybe doing more advertising or doing coaching, training, and education is one of my biggest line items on my budget. Full disclosure, I personally spend about $50,000 a year just to get trained and educated and coached on my business. All right, so for me, that's a huge key activity because it is actually generating me results. It is boosting the profit. It is boosting not only the top line, but it's also boosting the bottom line. By the way, accountants are so simple that when they say top line, they literally mean the top of the first line, so sales. And when they say bottom line, they literally mean the bottom of the last line, profit. I mean, some things in life are so simple that when you think about it, you're like, wait, is it really that simple? Top line means it's the top of the first line. Bottom line means it's the bottom of the last line. So top line means revenue. Bottom line means profit, or net income, I should say. So I know we just covered a lot, especially for those on the Zoom today. Any questions, at this time? Any questions, comments, anything like that? Let me see if we have that. All right. So it looks like we don't have any questions so far. So yeah, you do want to make sure that you're keeping track of your return on investment. For me as an investor, I think that's one of my unique skill sets is that I'm also an investor. I'm not just an accountant. I'm not just a financial professional. I'm also an investor. So I have to make investment decisions every single day. So even if you're not an investor though, you need to make sure you're tracking ROI, return on investment, every single time. Now, one thing you want to do is you want to eliminate costs that don't generate ROI. So, for example, cable, right? Cable, if you don't watch TV, or maybe you're watching too much TV, and it's taken away from your business, you got to get rid of that, right? And then try to leverage resources so that you can minimize costs in certain areas. Maybe there's a certain line item on your budget that can be leveraged into multiple areas. Remember that whole upselling thing? Maybe you have an employee that's skilled in 2 services, so you should probably train them, right? Use your training and coaching budget to train them on that skill so that they can deliver that service to the customer. Looks like Memory has a question. Be more than happy to take it at this time. Mm-hmm. Yeah, that's a great question. So the question was, there's a report out there that allows you to track your industry, to see the profit margin, to see basically to really understand your business. And as a business owner, you should understand the industry like the back of your hand. When somebody asks you a question about your industry, you should know the answer to it, or at least have the means to research that answer. But basically, that platform is called IBIS World, and that's IBIS, IBIS World. And if you need a report, for those that are joining us today, send me an email at jb@badutaxservices.com. Once again, jb@badutaxservices.com, and I'll be more than happy to send you a report, basically. All right. Yeah, no problem. And then we have a question from Jeremiah. He said, what other specific places like Yelp have you seen an ROI? That's a great question. I like that. So although it's not a marketing segment, I'll be happy to answer this one. When it comes to advertising your business, one is Google. So for us, we actually don't do any Google ads, but I think it would, it would generate some results. The reason why is we do what's called Google 3-Pack, which allows you to be basically recognized at the top of Google. And it's like an excessive process where you're getting reviews, you're writing articles, you're being so proactive on Google to the point where your online presence gets recognized. So we don't do any SEO or any, Google ads or anything like that, but Google itself is pretty good to advertise your business. Another place is LinkedIn. LinkedIn is more relationship based. So when you're sending direct messages, giving people value, inviting them to events, I think that's a big one. I would say another one would be, Facebook, to be quite honest, we haven't had a lot of success as far as direct ads, but we do have success in like Facebook Live, for example, Instagram Live, and Facebook, of course, owns Instagram, which they might have to separate one of these days because apparently Facebook is too big. But yeah, I would say Facebook we've had the least amount of success with when it comes to advertising. Other ones are like Thumbtack, but it could benefit you. I would say try it out. Test the waters. Dip your toes in the waters like Warren Buffett. He said anything new he gets invested in, he first dips his toes in the waters. And then once he sees that it's at the right temperature and he's comfortable, then he jumps in with both feet. Then he goes full throttle on it. So maybe start off with a small investment. Maybe start off a little bit like Thumbtack. We start off with just $50, and we just saw how it can do. And even with that $50 investment, it can actually yield you some results. We just didn't see it just didn't look good because they even offered us like another like $100 free, and it was as if robots were on the page or something. Like you reach out to somebody, they say, hey, everything's good, I've scheduled a meeting, and next thing you know, they don't show up, or it was just not a good experience. So Thumbtack, that's one we haven't had success with. We haven't had success with Facebook that much, but I know there's some industries that, man, you can crush it with Facebook. Like if you're in a retail space, you can really crush it with Facebook because then people can buy your product or product directly on Facebook. So let's see here if we have a question. Yep, that is a great point. So somebody said, can you put your email in the chat? So let me go ahead and do that for everyone. So the email, once again, is jb@badutaxservices.com. I just put it in the chat. And I also put my direct business line, which is 773-679-7198. 773-679-7198. And then if you want more content in general, I do have a website, which is jeffbadu.com. And that gives you a lot of access to resources and education tools. So before we move to the next slide, which goes, we've already shared a bit about the budget. I guess I'll touch on some other points. But is there any questions on this key activities and the expense side of the business? All right. Looks like we don't have any questions for now. So now let's go to budgeting. And I know I just shared with you what a budget would look like, so you guys got a sneak peek. But budgeting is very important. It's when I started learning about money, one of the things that I learned was that you can't be successful financially if you don't have a budget. And that applies to personal, and that also applies to business. In this sense, we're talking business, but anything we talk about here today, you can apply it to both business and personal. And real quick, we have a question from Jeremiah. He said, how much of your budget goes to ads? So I'll just break it down like this. So it's seasonal, first and foremost. So we spend $3,000 a month to Yelp, $3,000 a month. And then we pay about $100 to a Yelp expert to optimize the page for us. So we actually pay a consultant. And then we pay about $600 a month to Google in order to optimize, or that same expert, she also optimizes the Google page and writes articles and does a lot of things to help us stay, number one in the search engine, basically. Helps with reviews and all that. So we pay a consultant. Basically, we pay her $700 to oversee that process. So where we at now? We're at $3,700. And then we pay $300 for geofencing. So that's $4,000. And then where else do we pay? We pay about $100 for LinkedIn. So LinkedIn, we do have LinkedIn Professional. So that's about $4,100 or so. And then let me see, where else do we advertise? We do run Facebook ads, but we actually have a benefit through Facebook. We have a program through Facebook that allows us to get $250 worth of free ads every month. Please don't ask me how I got it, because it is a top secret as far as where I got it from. So we have that. So we spent about $4,100 total, and then we pay a marketing consultant, or we have an in-house marketing assistant to help with all of that, and we pay him about $500 a month. So all in, give or take, we pay about anywhere from $45,000 to $5,000 a month in advertising. That's during tax season. And during non-tax season, we actually scale it all the way down to about maybe $2,000 or so. That's just because during non-tax season, we're usually focused on other components. We're focused on other services where we're leveraging our existing clients. So tax season, our goals we're bringing in clients left and right. We're landing 50 new leads every single week. And to be honest, it's actually more than that now. It's probably 100. But from Yelp, at least, we get 50. And now through other means, we get probably 100 new leads every single week. So that's quite a lot. And then he asked, what is geofencing? So geofencing is basically where somebody clicks on, let's just say that they went to search for jackets and they somehow landed on your retail website. Well, with that, now that computer there's like a coding in the system that says, okay, this person has searched for jackets and they went on this website. That website is going to pop up on a bunch of different sites that you go on, such as Facebook, such as Twitter. Maybe you went on the site to watch a movie. So it fences you, it basically fences you in, so that every time you go on a website for a certain period of time, every time you go on a website, it shows you an ad so that it's front and center. That way you're like, oh man, I haven't bought that jacket yet, so let me click it. Or maybe I was looking for a jacket. So basically the same thing there, but we do it for taxes instead. So during tax season, your computer just might get geofence. So just something to keep in mind. So this is brand new. We don't know the success rate. It's completely brand new. We just started it. We'll see how it goes. I can let you know how everything goes with that. And we do a 6-month test of anything new that we bring in the firm. So we do it for 6 months. We see what results it's bringing. Is it bringing a positive return on investment? If it's not, we cut it off. Simple as that. If it is, then we keep it. But it depends on the return on investment. We typically aim for a 20% or higher return on investment. If it's anything less than that, then we're better off just putting more money into something like Yelp, which generates us a much higher return on investment. Now, with Yelp, we do have to be careful, though, because one of the reasons why we hired the consultant is because she told us that, hey, sometimes what Yelp does is they take your organic clicks and they move it to the ad section. So that when they click on the ad, you have to pay them money. But when they click on your organic page, you don't pay them any money because it's organic. Organic means you don't pay anything. So she said that during non-tax season, this is another reason why we spend less money during non-tax season, because we get more organic clicks. That way we don't have to spend as much money, but we might still get a decent amount of leads. We're still getting leads left and right. Right now, we're operating on a $500 a month budget this month, but next month we're scaling up to the $3,000 only because Yelp offered us $1,000 extra for the first 2 months, and then we scale down after tax season. So that's just If you need more insight on that, we can talk more after the fact, but that's some secrets for Yelp at least. Go ahead and charge this. Looks like we got, the battery is dying a little bit on this Instagram. Okay. Give me 1 second here. Yeah, so the Instagram one might actually run out because of battery, believe it or not. So let me just go ahead, try to get this charger going. Let's see. The iPhone always has a unique way of doing things for some reason. So if you do get cut out on the Instagram, please bear with me. We are still live on Facebook, but it might just cut out on Instagram because it's a bit complicated with the platform or the phone that I'm actually using for that. So with the budget, you should have 2 budgets actually. Everybody should have 2 budgets, especially in a business. You have your annual budget that shows annual results. So how much revenue will you make for the year? What are the specific line items of expenses, advertising, utilities, production costs, all of that. So you lay it all out, every single thing, lay it all on paper. One of the key things about budgeting is being transparent, fully transparent. Then you simply take your annual budget divided by 12, and that gets you your monthly budget. So this is what you'll use in order to track on a monthly basis. What we do each month, we compare actual to budget to see, did we hit our target? Yes or no? If yes, great. If not, why didn't we hit our target? Were we too optimistic? Did business slow down? Was it a seasonal thing? So we always have a target, a targeted revenue amount every single month. And then we have our expenses. All right, I just share with you that during peak season, we spend more on Yelp ads. During non-peak season, we spend less on Yelp ads. So our budget gets adjusted. You should always be adjusted in your budget based upon what's realistic. So the key with budgeting is please make it realistic. Don't make this fancy. I mean, you can get optimistic. You can go the extra mile with your budget, like your revenue numbers, but keep it realistic. If you know something is going to happen with 100% certainty or 99%, then go ahead and put it in the budget. Like you're about to pay for this, equipment, or you're about to pay for this new employee. Make sure your budget reflects such results or such expectations. Now, one thing with the budget is it does help keep you on track. So the budget does help you stay on track, and ultimately what you can do when it comes to that is just make sure that you so as you're comparing your budget, as you're analyzing all of these things, just make sure that you're ultimately, let me get this Instagram thing working here. All right, so you might, okay, give me 1 second, Instagram folks. I think I found the secret. There we go. All right. So I had to switch the camera a little bit for Instagram because of the charging. I want to make sure you guys don't miss out on any information whatsoever. Let me actually go on this view. Let's see if this will work pretty good. Please bear with me as I deal with my technical difficulties. I don't know why this. Okay, here we go. All right. Yeah, for those that are interested in seeing what I'm doing, I'm basically, so one thing about some of these iPhone chargers is that it doesn't have a USB like thing, or basically it has the charger where it's like it's not computer enabled. For whatever reason, Apple decided to change that. So I'm pretty much optimizing the Instagram so that it can be good to go. So that's so what we'll actually do is with the Instagram, we'll actually just let it charge up for a bit, and then we'll get back on live. All right, so let me get that out the way. But basically, with the budget, you want to make sure that you have the annual budget and then you have the monthly budget. It's very important to make sure you have two. What the budget does is it allows you to stay on track. right? So it allows you to see how you're performing with your company. And then you can compare it against your goals. So each year you should set goals. How much revenue do you want to make? How much profit do you want to make for the business? And how do you determine profit? Is look at the profit margin in your industry. Maybe you've never seen what your profit was. Look at the profit margin in your industry based on the IBISWorld report, and basically take that percentage, multiply it by the revenue, and that determines your profit number. Right? And then as you get more deep into the business, as you get more experience, you can say, okay, well, we made $700,000 this year, or I'm sorry, we made $700,000 last year, and we profited $400,000. We made $300,000 2 years ago, and we profited $100,000. So then you can say, okay, well, we're projected to make $1 million. Basically, we're projected to make $1 million in revenue, and our profit will probably be $600,000. So that's probably a 60% profit margin or return on investment. That's huge. That's pretty good. That's pretty good. I would say return on investment for me, we never invest in a real estate building unless it yields at least 20% or higher cash. We call that cash on cash return on investment. It's the same thing, it's same concept, except for in real estate, we put a lot of loans in there. So we have to get to the bottom line, cash on cash return on investment. So that's a fancy term we use in real estate. It means the same thing in a business standpoint, but it's just a fancy 3 words that we add: cash on cash, return on investment. So what you can do with the budget is you can compare it to the actual results. So basically make sure that as you have your budget, compare it to what actually happened during the year. And then you can have multiple budgets that incorporate different components. So you can say, okay, well, this is our budget for the tax preparation unit. This is our budget for the tax planning unit. This is the budget for our financial coaching unit. This is the budget for our retail unit. You can have different budgets in that. Budget should always be part of your business plan. You should have at least 3 years worth of a budget. And honestly, it can be hard to predict what's going to happen 3 years from now. So what you can do is you can use an arbitrary 10% increase in all the numbers, except for things that are fixed. But the key to budgeting is continuously update the budget based on different factors. Always update it. If you have seasonality in your business, make sure you're updating the budget based off that. If you have certain times where you spend X amount of dollars, then make sure you update the budget on that. If you have months where you're paying big bills up front, make sure you're updating the budget on that. So with that being said, would love to answer any questions before we look at a sample budget. I've already kind of showed you guys one, but I think it would be good just to go through it again, just to really, really hone in on the concept here. All right. So I guess I should have also mentioned that the budget does have different components to it. So now let's talk about the components to the budget. First is revenue, and that's money that's coming in. So when you sell a product, it generates product revenue. When you sell a service, it generates service revenue. So revenue is all the money that comes in, just pouring in left and right every single day. It's generating revenue. Expenses include fixed expenses and then variable expenses. Fixed expenses do not increase as revenue goes up, basically. So a fixed expense is something like rent. Rent doesn't change whether or not you make $3,000 this month or $10,000 this month. It's the same. A fixed cost does not change when your revenue goes up. Now, a variable cost might change. Those are things like utility bill, maybe your electric bill, things like advertising, other things like, let's just say, employees or commissions. Commissions is a big one. That's a variable expense. However, salary though, when you have somebody who's sitting at a cubicle and they're getting paid a set salary, well, that's fixed unless they get paid bonuses. That's a variable. So every expense, another thing you want to do in your budget is to see, is it fixed or is it variable expense? And net income, all of that, revenue minus expenses equals net income or profit. So that's the difference between how much you brought in minus how much you spent or took out. And that leads into your net income or your net profit. So with that, let's just go back in our example of our net profit. And for those that are on our Facebook Live, as a reminder, we do have the Chicago Urban League on today, right? So we are doing a presentation right now. What I'm doing is I'm sharing my screen to show what a sample budget or profit and loss statement looks like. So remember, with the budget, we're starting off with income or sales at the top, right? And then we have expenses, advertising, bank charges, commission and fees, contract labor, car and truck, insurance, interest, health insurance, job supplies, legal and professional services, meals, office expenses, rent and lease, repairs and maintenance, salaries and wages, supplies, taxes and licenses, travel, and then the infamous other business expenses. So this is a template that you can use to develop your budget each year. Now, I would recommend using something that's a bit more robust, such as QuickBooks, which that's something we'll talk about in our next segment. But QuickBooks is a way that you can ultimately develop a budget. Looks like Memory has a question. Love to take that at this time. Mm-hmm. Mm-hmm. So have you collected that money yet? Okay. That's a great question, by the way. So I think what Memory is asking is she's comparing what we call cash basis accounting versus accrual basis. Cash basis means we record something the moment the cash either comes in or the moment the cash goes out. So when we're dealing with the budget, we're talking about cash basis, cash in, cash out. When we're talking accrual basis, we're talking, okay, maybe you've provided the service, you've rendered the service, but you're yet to receive payment. You've earned that revenue, but you've yet to receive payment. Or on the other hand, you've basically incurred that expense, right? You know you've incurred it, but you haven't actually spent the money. So when it comes to this budget, remember, when you're going through your monthly financials or your profit and loss, you're only reporting money when it comes in and when it goes out. From a budget standpoint, you're just predicting how much could come in and how much could go out, basically. Exactly. Yeah, definitely understand. So yeah, a budget is simply a prediction, a best guess of how the year is going to look based upon what you know, using the best information possible. It's a prediction, so you can put any number in here, but it should be realistic, right? Your sales should be the quantity of what you can sell times the price of what you sell it at. And then that's going to help you determine your revenue. And then expenses, we know what some of these expenses are. We know that it costs us 40 cents to make a t-shirt, right? We know that Yelp is charging us $500 a month to advertise. We know that our rent is $500 a month. Like, there's certain things that we know. So we plug those, whatever we know, plug them into your budget immediately. Things that you don't know, maybe take it as a percentage of revenue instead. So maybe say, okay, we want to dedicate 5% to advertising, because in our industry, 5% tends to go to advertising. This is why the industry report is of the utmost importance, because without that, you don't have anything to really use. I mean, how can you know what your industry is spending on employees? How can you know what your industry is profiting if you haven't taken a look at the report, yet alone read the report? You know, so that's something that you always want to consider. Remember, if you do need a report, shoot me an email and I'll send you a free report. IBIS typically charges $1,000 to $2,000 per report, and I'm willing to give you a synopsis of that report for free. It gives you every key point you need. When I started my tax preparation business plan in 2010, that's exactly the report I used. And in 2020, I still read the report. I read the updates. What are some things happening? For example, it told me that the industry was going virtual, that companies like TurboTax would dominate companies like H&R Block, and that is exactly what's happening today. Sometimes a report gives you so much insight, and you're like, wow, okay, it is true. And with the pandemic, it just made the case even worse, because now people aren't meeting people in person like that anymore for the protection of their health. You know, we haven't seen a client in person in almost a year now. Like, in our firm, we have over 2,200 clients, and we haven't seen a single client in person, except for like family, friends, you know. We do love them as clients and we love them as people, but we don't tend to really count them as, you know, like external clients per se. So, yeah, go ahead, Memory. Mm-hmm. Mm-hmm. Yeah, for sure. For sure. Definitely. Yeah, that's a great question. Yeah, that's definitely a great question. So Memory was asking if you have multiple businesses. So there's two parts to the question. First one is if you have multiple businesses, how do you budget for it? Secondly, if the businesses are seasonal or one of them are seasonal, how do you do it? The first thing is we want to do separate budgets for each company. We don't mix and mingle, ever. Ever, ever, ever. We don't mix and mingle. We don't mingle our tax firm with our real estate business. We don't mingle our tax firm even with our financial coaching business. We don't mingle anything. We want to have separate budgets for each and every company. We want to have separate industry reports that we're reading for each and every company. You want to treat every company as if it was its own privately owned individual company that is completely not related to even the main business. Now they can share certain certain like advertising or certain branding sort of things, but from a budgeting standpoint, you want to treat them as if they're separate. So that's one answer to the question. Now about the seasonality of it, how do you predict seasonality? I think you really have to really know your industry well. What are the peaks of it? Tax season is probably when we earn the most revenue in tax preparation. So our budget can be higher on the, January through April side compared to the May through December. Now we actually do have two tax seasons. One thing a lot of people don't know, there's two tax seasons. It's actually January through May, and then there's September through October. So in reality, we have about 7 months during the year where we have tax season. And the other 5 months, we can, quote unquote, relax, take our vacations, do whatever we got to do. But those 7 months, we're here. We're in town. We're crushing it. We're helping our clients with their taxes, but we also do things like tax planning, which is a year-round service. That can happen at any point in time. We're doing a lot of tax plans right now, as a matter of fact. That's our biggest revenue generator in the firm right now. So with that one, you have to really understand your industry, understand the seasonality, the peaks, and all that good stuff. So as far as like a percentage to drop the revenue during certain months, I don't know exactly. I would say maybe to be honest, you might want to do a 50%, maybe do a 50% haircut on non-busy months. But that should also motivate you to go out and get business during non-busy months as well. Exactly. Does that answer your question, remember? All right. Sounds good. Okay. Does anybody else have any questions about the budget? Because that pretty much wraps up the budgeting component of things. And I do have a bonus segment for you guys. And it looks like we might actually get out of here early today. So that's something to be on the lookout for. But any questions before I get into the tool you can utilize? All right. So one thing about a business, remember, is that if you can't keep track of the money, you do not have a business. I repeat, you do not have a business. So what you want to do is you want to make sure that you're keeping track of the money in your business. One thing about businesses, and I understand some people are like, oh, why do I have to spend money? And remember, it's an investment. So one thing that I encourage all businesses to do nowadays is to incorporate the 4-hour work week method, basically by being more efficient in what it is you do. One way to improve the efficiency of your finances or your books is to automate the process. One way to automate the process is to use a software known as QuickBooks. Now, next time we will go through a tutorial, or we'll go through some of the advantages and disadvantages of QuickBooks, but I would strongly recommend you use QuickBooks. QuickBooks is an accounting software that, with the Excel that I just showed you, it can generate all of that for you. Here's a secret. I actually got that template from QuickBooks directly. I'm an avid user of QuickBooks. I just left the council. I was a part of the QuickBooks Council for 2 years. We just had our last council meeting. It was last Friday, so we graduated as council members, and we talked about a lot of things. And basically what we're coming to find out is that more and more business owners need something like QuickBooks, where it can be robust. It can automatically download and categorize certain transactions for you. It basically puts everything in an automated format. We'll talk deeper about it next time. So I would say QuickBooks is one of those tools that you can use in order to keep track of the money, so that you can ultimately have a nice solid budget going for you. Now, it's okay to start with Excel, at least at first. You have to have something. The whole shoebox thing doesn't work. You got a whole shoebox full of receipts, you hand it to your accountant, and then times change. In 2020, we had a COVID-19 pandemic. Times changed. People went virtual. That means we have to change with the times. We can't stay stagnant. We can't get complacent. Businesses are evolving. Things are shaking up every single day. You might not know it, but it's happening. People are moving to Texas and Florida right now. That's where businesses are going. They're not going to Silicon Valley anymore. They're not going to Wall Street. They're going to Texas and Florida. They're like, why in the world would I pay so much in taxes? Why in the world would I want my employees to have such high cost of living when we could have done this whole thing virtual anyway? Does it really make any sense whatsoever? So they're moving to Silicon Valley. Elon Musk, he's in Texas right now. He moved from Silicon Valley. He's gone. So as businesses, we have to evolve over time. We cannot stay stagnant. If we stay stagnant, we will go out of business. Just look at Blockbuster. What happened to them? They couldn't keep up with companies like Netflix. They thought, oh yeah, who's this Netflix company? Nobody's really going to be streaming. They're still going to want to buy DVDs and all of that. And what happened? Blockbuster went bankrupt. I would hate for the same thing to happen to your company. You have to evolve with the times. If people are moving virtual, you should be moving virtual. Right? So as a matter of fact, here's what I really encourage you to do. Find a trend that not a lot of people are doing and start doing that. Like, get ahead of the times. And nowadays, there's not a whole lot we can do to innovate, but there's still certain things we can do. So just always find that, we call that a competitive advantage. There's still a lot of accounting firms right now that are not virtual. So what's our competitive advantage? We're a virtual CPA firm. There's a lot of accounting firms that don't educate their clients to the point where the clients have no clue what's going on the tax return sometimes. So what's our competitive advantage? We educate our clients on what's going on the tax return. We do workshops. We do newsletters. What's another thing? A lot of accountants don't have other referral people in their network or things that they do in-house. So what do? we have certain services in-house, and we have a large referral network of people like attorneys and people that help fulfill the business side of things, from, let's say, legal, marketing, so that we can help the businesses grow. We're basing ecosystem. And then last but not least, what's one thing that a lot of people don't necessarily like about accountants, no offense, but the average age of an accountant or CPA is 65 years old. And so there's not a whole lot of longevity there. People usually, when they do business with people, they want a long-term relationship. They don't want, I have to keep switching every year. The average age in our firm is about 30. So we're literally cut in half as far as the age, which increases our longevity by another 30 years or so. So probably the reason why it's only 7 years that somebody's sticking with their accountant maybe is because that accountant is usually, in their mid to late 60s. So perhaps we can have a 30-year advantage. We can expand our time span instead of 7 years up to 30 years because we're a younger CPA firm. We're training, we're educating, we're developing every single day in the process. So I think that's a great way to end the segment today, in that you really, really have to get ahead of the curve. Start looking at things that your industry is not doing. And see things in the report that are telling you, man, if you did this, if you really did this, that would take your business to the next level. 10 years ago, the IBIS World Report read that accounting and CPA firms would be dominated by technology, online, virtual. Back in the day, and still now, to this day, most accounting firms are not virtual, even during COVID-19. So that, you know what that means? That means we're 10 years behind. That also means we're 10 years ahead. So with that being said, that means that 5 years from now, they're probably all going to go out of business. And what's going to happen with the virtual CPA firms? We're just going to take over their clients, basically. So you always get ahead of the curve. Try to get ahead of the curve. Try to see things in advance, like Bitcoin. How can you start accepting Bitcoin payments? That's one thing that some people haven't tapped into yet, cryptocurrency. We'll talk about that next time too. But how do we get ahead so that when it does happen, we're already there? It's not like we're waiting. We're already there, basically. We're just waiting for people to catch up. We're waiting for it to be popular, but we're already doing it though. So that's one of my biggest advice today to the businesses out there. Business owners are near and dear to my heart. I'm a business owner myself. I started small, and ultimately, I've been very fortunate to learn some of these things so that my business can grow and advance. So with that being said, it looks like it is about 7:30 or so. So it looks like we'll be able to end early today. And with that being said, I would love to open up the floor for any questions, clarifications, comments, anything of that nature. Any questions at all? All right, sound like we got a pretty quiet group, but let me go ahead and stop the recording. So with that being said, thank you guys for being a part of this segment today about budgeting and really taking ownership of your finances. So if you do have any questions, you can reach out to me. My email address is jb@badutaxservices.com. I did leave that in the chat, but it's once again jb@badutaxservices.com. Direct line is 773-679-7198. And you can also check out the website, jeffbadu.com, for resources on finances and things of that nature. Appreciate it, James.